Hello, this is Jeff from ZenTrader.ca and TradeWithZen.com, and I want to give a market timing update. And I want to talk a little bit about how I've adjusted how I use my own market timing signal over the past couple of quarters, based on something that I had noticed and accepted the fact that I'm not as good at shorting stocks as I am as identifying momentum stocks, long opportunities. So to start with, my timing signal has gone bullish on the NASDAQ and on the Toronto Stock Exchange. The Dow is still long-term bearish, and you can just simply see that in the fact that we're not at new highs yet, not at new 2013 highs in the Dow, so it makes sense that this has yet to turn. But something that I've noticed and I've adjusted in my own trading is I've really stopped, for the most part, shorting stocks, because I've taken a look at my trades and where I'm most successful at, and it's really buying stocks on the long side. It's not to say that I'm not continuing to look for a strategy that pays off on the short side, but as for right now, and this is going to feed into another theory that I have about why shorting stocks is just not profitable right now. So just focus on the circles right now, because these are trend changes in the market. So I only went back like 8 months, but right here, this is when, and this is just for the NASDAQ. NASDAQ goes bearish, market rallies, flips bullish, rallies some more, goes bearish. This was really the only time that you could have really profited from actually just shorting the ETF for the NASDAQ, but it would have been tricky. Because you would have gotten short and it would have went down and then it would have rallied back up, and who knows, maybe it would have hit your stops and then you would have gotten out, and then it rallied down and then it sold off and then it rallied up more. So this was really tricky, and then it had a final whoosh down. Bullish, this was profitable. Bearish, this was pretty much, it rallied right up, came down. You would have had to have been nimble. Bullish, the markets went sideways for a month. If you were in the right stocks, you probably were making money. If you were in momentum stocks during this period, this can be very profitable, even in a sideways market. The last bearish sign, boom, it was literally a bottom, and now we're bullish again. And so generally for me, what I've been doing is, when my market timing signal is bullish, I'm aggressive on the long side. When it's bearish, I'm at reduced exposure in the markets, and I'm looking for the markets to pull back enough to give me an entry in long stocks that I've been targeting. And the reason why I think this is, I just feel that we're in an unnatural market with the Federal Reserve's finagling and the QE to infinity, and so they're just not letting the markets go down. So shorting stocks is really, it's a house game right now, and you're going up against the house, and it's just not a good idea. Now that will change at some point in time. The markets are always changing, and so does that mean that my down signal for the markets don't work? No, it means that you need to adjust and change how you use the information. If you've been keeping track of certain information, it doesn't matter on the outside what it looks like. Let me see. So you could keep track of it, and it could say, if it does this, then it does that. And if you notice that what happens changes, you can still use it and be profitable. So real quick, since I'm running out of time, the Dow still short on the long term, and then the mid and the upper are up, the middle and the shorter up. And on the Toronto, you can see here, gold has really had a big influence, and it's pushed this as of today's close to all three green lights on it, long, mid-term, and short term.